What's up, Trader's Edge? It's Mark Sebastian, your only option with your look at what happened this last week. Today, I'm going to talk about the levels in the S&P, the Qs, the Russell 2000. I'm also going to look at the volatility index, and we're going to talk about bonds. So with that, let's dig in. So before we talk about bonds and stocks and stuff like that, I got to tell you about Andrew's Flash 10 and option fingerprints. I'm going to be talking about option fingerprints in a second. This is your last opportunity to join at our launch pricing for Andrew's option fingerprints trading, his Flash 10 system. He's got 10 trades that he's going to do that big money is buying long-term options in, that because they think those stocks are going to go to the moon. You can join Andrew in those stocks by clicking the link in this email. You're following me on YouTube, like, subscribe, leave a comment or a question, and I'll get to it. So with that, let's dig into the market. So we'll start with the SPX and what that did. SPX had kind of a flattish week. This was our lowest movement week we've seen in a very long time. Friday, we closed 57.18. We closed $20 higher on the week. It was a really low vol week. And I'm going to tell you why that's important here in a second. But things do look a little bit soft, and there's a ceiling on the S&P at 57.50 from a major option fingerprint that I'm going to get to in a minute after I talk about the triple Q and the IWM. So the Qs, they actually look soft. The low of the day on the Qs comes in line exactly with the high from August. I'm thinking we've got a real good shot of at least testing the 21-day moving average down at 472. It looks a little bit soft. Next up on my list of names is IWM. IWM, after a kind of having a rough go of it after that initial rate cut, has now seems to have found some footing. If I'm going to go along an index later in the week, it's going to be IWM. I'm probably that's the one I think has the most upside. So back to SPX. Why is there ceiling? The answer is option fingerprints. So JP Morgan runs a hedging program, and currently they're short about 44,000 of the 5750 calls against as part of a collar. Market makers are long those. So when we get above 5750, they have to sell futures. That pushes the S&P lower. We've seen that 2 days in a row where it gets over 5750. The market makers sell futures. The index drops. And until JP Morgan rolls that, and they're going to roll it on Monday, that is our ceiling. Now, that being said, I think the market is kind of soft here, and I like it to potentially go lower. Now, let's talk about the VIX, because as low volatile a week as it was, VIX exploded. I mean, the VIX futures closed 1935. That is just absolutely astounding. Now, I want to show you what they looked like on last Friday. So here was the VIX futures curve last Friday. Last Friday, the October future was 18. It closed 1935. On a day we moved up. On a week we moved up 20 points. There is something looming. People are worried. I'm worried there's something potentially major happening. I think it's worth owning some puts into next week. The vol move was really weird, which brings us to bonds. Bonds did pull back a little bit post-rate cut, but I now think they're primed for a little rally. I like bonds to maybe 99, back over 100. They look pretty bullish. All right, folks, that's what happened this week. Make sure to check out Andrew's Flash 10. Again, if you haven't, that's in this email. I am Mark Sebastian. I am your only option. Have a great weekend. I'll talk to you guys soon.